Is it possible to make money while you sleep? The short answer is yes. And the secret lies in creating passive income streams. Hi, I'm Wes Wood, the Income Guy, and I'm founder and president of Wood Financial Group. And for nearly 20 years, I specialize in helping hardworking Tennesseans, just like you, reach their retirement goals through income-based financial strategies. And if you're looking for the right solutions to achieve your own financial goals, I can help. Just reach out to me at retiretv.com or by calling 615-826-5749 during today's show or at any time. So, the term passive income gets used and misused a lot, especially in this online age. And yes, there are some people that do use the internet to create passive income streams, but it's just one possible strategy. Investing for income is another. In fact, passive income is what the income model is all about. So how does it work and what makes it different from the other passive income strategies? And we're going to cover that and much more in today's show, titled Making Money in Your Sleep with Passive Income. We're going to cover what passive income is and isn't, different passive income strategies that can work well in your retirement, and why passive income isn't totally passive all the time. And joining me on this week's show again is David Scranton. David is the Investing for Income specialist with over 30 years of experience, and he's also a best-selling author and a television host. But before we get to Dave, let's talk about passive income. So, what is passive income? Well, basically, it's the opposite of active income. Active income is the money you earn from your employer. Passive income can be generated in a variety of ways, such as a business venture where you put in the work up front and then you get income. Or maybe you're getting royalties from a book or a song you wrote years ago. That's passive income. Or if you're getting irregular payments from sales of a product that you helped invent and developed years ago. Again, passive income. Another popular approach is to invest in rental property. But like with many passive income strategies, it often requires more work than you might expect. That starts with the planning stage, where you need to answer 3 questions. What kind of return are you wanting on this investment? What are the total costs and what are the expenses? And what are the financial risks to owning this piece of property? And that's just for starters. Other considerations are going to include, like, is there really a market for your property? Can you do the maintenance and manage it for yourself, or are you going to have to pay someone else to manage it for you? And how are you going to screen tenants to make sure that they're trustworthy? What if you can't rent it at all at the price that you want to get that income coming in? The point is, even one of the most popular approaches to generating passive income isn't really passive. It takes careful planning, due diligence, and of course, ongoing management. But if you do all that, is owning rental property potentially a good passive income strategy? Is it a safe money to make money while you're sleeping? And ultimately, the answer is yes. Because if you're invested wisely, you found trustworthy tenants, and you're managing your property well, you can go to bed every night knowing that those rent checks are on their way. You can create reliable sources of passive income. But is it a good strategy for retirement income? I'm going to talk about that more in just a bit. But for now, you can learn more by reading my timely report, The Fundamentals of Retirement Income. And it comes in your free retirement income kit that you can get by visiting retiretv.com or by calling 615-826-5749 to request your retirement income kit. But now, let's welcome David Scranton. Dave is the founder of Sound Income Strategies and the Retirement Income Store. Hello, David. Thanks for joining me again today.
Hey, Wes. Great to be here. But listen, while you're talking about this, I think maybe before we get started, you should probably start by talking about what making money while you sleep really means. Because when a lot of people hear that, a lot of your viewers might be thinking, well, it's some kind of scam. And of course, you and I know it's everything but a scam, right?
Exactly. Sometimes when you hear the saying, making money while you sleep, immediately your head goes to some type of multi-level marketing scheme or some type of scam. It sounds too good to be true. And I'm sure there are plenty of cases where it quite frankly is, where it's some type of scam. But what we're talking about today is not a scam whatsoever. It is a great way to actually make money while you're sleeping, and what we're discussing on today's show.
So in reality, there's really no, gosh, in the income generating investment world, there really is nothing that's truly a set it and forget it strategy in the purest sense of the word, right?
That's correct, Dave. And you really got to take a managed perspective. I mean, you need to make sure you're buying the income investments, obviously at the right time for a good price, but then you got to keep an eye on them. Even though the income is passive from these investments, you need to still take an active role to managing those. Similar to that real estate analogy that I gave a minute ago. When you have a piece of rental property, you need to, one, make sure you're buying the piece of property at a good time for a good price. You're getting the type of income that you would expect from it, and you're taking an active role on managing it. For instance, the maintenance and the bills. And as with rental property, investing for income in income type investments, like the income model, you still need to take an active role and make sure that even though you bought these investments, that you're always tracking them, watching them, and doing a good job managing them.
Yeah, and that's because sometimes an investment might turn a little bit where maybe you don't like it anymore, you don't want to hold it in your portfolio, but also the proactive stuff, right? In income investing, isn't it true that sometimes proactive management, looking for swaps for opportunities, is what can help you engineer an inflation hedge for your clients, right?
That's right, and we'll talk about inflation in another show, but that's definitely something you have to look at. You know, sometimes there's opportunities in fixed income. Maybe we could, sell something for more than what we bought it for, turn around and invest those proceeds in something that's a little bit more conservative, but generate a similar type of income. That could be an opportunity to improve the position. Or maybe we're in a situation where we're in some type of position that looks like it could not, be looking very good. Like if we had another COVID 2.0, for instance, maybe some of those positions that we're holding in a portfolio right now look okay, but if we happen to go through another COVID again, some of those industries aren't going to look as strong, so maybe we need to cut our ties and go into something else to generate some income so we're not taking any unnecessary risks. That's right.
And having a future show just on inflation is a great idea given what's happening right now with the government's inflation claims. But how about Social Security, right? That's one of those areas too where you talk about it all the time. That's not set it, forget it. You need to make the right decision and contemplate for a while before you pull the trigger, right?
Right. I mean, it's easy to accumulate your Social Security benefits. You just pay your FICA taxes, your Social Security tax, and accumulate it. But there's hundreds of different rules, hundreds of different combinations, and if we don't take the right rule or go with the right combination, it could be the difference in hundreds of thousands of dollars in benefits. That's right, Dave. And hey, stay with us. We're going to talk more in just a bit, but coming up, I'm going to talk more about how some of the passive income strategies will work for your retirement. I'm Wes Wood, the Income Guy, and you're watching the Retirement Income Show.
Retirement accounts like 401ks and IRAs are great tools to save for retirement. They offer tax advantages to help keep more money in your pocket. But withdrawing money from your accounts can have a huge impact on your tax liability. Take money from the right account at the right time and you could minimize it. But taking money from the wrong account at the wrong time could result in a big tax burden. If you're not sure what you should do with your 401k in retirement, visit retiretv.com to schedule a free, no-obligation conversation with Wes Wood and Wood Financial Group.
Welcome back. I'm Wes Wood, the Income Guy. And hey, thanks for joining me today to talk about making money in your sleep with passive income. So far, we've shared some examples of passive income and talked about some of the challenges. But now let's look at some more examples of how they may work for retirees. You know, one thing about today's generation of near retirees is that many don't really want to retire. What they really want to do is have a career change or a means of earning income that gives them more freedom and control. Like starting a business or creating a product that generates passive income can be a good way to satisfy those goals. But once again, these strategies take good planning and active management. Strategies like affiliate marketing, flipping retail products for product, creating an app, starting a blog or a YouTube channel that generates ad revenue. These are just a few of the examples of how some people, including many retirees, are using their business skills and creatively generating passive income. In addition to satisfying the desire to keep working, these options can let you focus on something that you're passionate about and make your own hours. And they're great for people who want to be semi-retired. But keep in mind, success with any business venture is never guaranteed, and there's always upfront costs. Careful planning is crucial if your goals are to make money and avoid losing money. Ultimately, every passive income strategy is an investment, whether that means investing in rental property, inventory, software, advertising, whatever your strategy requires. The good news, of course, is that if you don't want to keep working after retirement, there are also investment options in the financial markets specifically designed to generate passive income. And I'm going to talk about more of that in just a minute here. But in the meantime, here's another opportunity to get your free retirement income kit by visiting retiretv.com or by calling my office directly at 615-826-5749. But now, let's welcome back David Scranton, income specialist. Hey, Dave.
You know, Wes, I can't wait till you get into actually some of those passive investment strategies. But you know, all these passive income business strategies you're referring to, it seems like most of them involve the internet in some way, shape, or form, do they not?
It seems that way. It seems that more and more people are, creating YouTube channels, blogs, selling goods and services through the internet, and by having these types of businesses that are through the internet, whether it's a service or entertainment or a goods or services, they're creating some type of income in some of those business models. But yeah, we're definitely seeing a shift for a lot of people that are making money through the internet, and their income that they're making is passive.
And to be fair, for people that still want to work, that are somewhat internet savvy, the reality is that there are some success stories in this realm, are there not?
Oh yeah, definitely. His name, I think, is Pat Flynn, that created a blog many years ago, spent a lot of time developing it, put in the upfront work, created this blog, and now he's been extremely successful with subscriptions and other goods and services to sell through his blog that generates him a ton of income. And there's probably a lot more successes similar to that, maybe on a smaller level, but oh yeah, they're definitely out there. A lot of people are working less and making income by not even having to go into jobs.
So obviously those types of things are going to be for a minority of your retirees that are watching your show. A majority are going to rely on not passive business income, but they're going to rely on passive investment income, the way I see it. Am I off base?
No, you're right. Most of the folks that we tend to work with around here in Middle Tennessee, once they retire, they're normally completely retired. They're not looking to have a second career or another business. So they're looking to live off of their income that they can generate in retirement, like their Social Security checks, for instance. Perhaps they're going to get some income from a pension, or they have investments, their IRAs, their 401ks, their investments that they've accumulated all these years, and they're looking to rely off of the income, the interest and dividends that they can generate from those investments to supplement their other sources of income.
Yeah, and even for some of your clients who do have passive business income sources, the reality is that probably in most cases, they don't satisfy their full income need. They still need some passive investment income sources to complement those business sources.
Yeah, that's right. It may just be, thinking about those business income sources, maybe just a portion of their needed income. And they're going to need more. They're going to need more from Social Security, from their investment portfolio. I have a lot of clients that manage their own rental properties, for instance. And I kind of think of that as passive income, maybe even a little bit of a second career, especially the folks that manage their own properties. It's some work for sure, but they're using that income not to cover all their expenses, but a generous amount of their expenses, and living off of their interest and dividends from their investments and their Social Security checks as well to supplement that need.
Now, most people that retire, I'm sure your clients aren't that much different from mine, that they have a life, right? So they don't want to have huge businesses once they retire. So a lot of your viewers are retired, I'm sure, but some of them are not. For those who are not, can you take a minute and just build the dream of some of the things that your clients actually enjoy doing during retirement? Maybe some things that might actually require more income than when they were working?
Right. Yeah, it's funny. I just had a conversation with somebody the other day. Called into the show and I talked with him, and he's about 2 years from wanting to retire. And we looked at his expenses that he had in retirement, and he said he's got about $3,000 in fixed expenses and $3,000 in discretionary. But one of the things that he mentioned that a lot of times I have to tell people is that he plans on spending more money during the first years of retirement, especially the years where he's active. Him and his wife can travel, can go out to eat more. And he said, I'd probably need an extra $1,000 or $2,000 a month to do all those fun stuff that I'm not able to do while I'm working. And he wants to golf more. He wants to go on vacations with his wife, like I just mentioned. And they don't want to have to cook as much at the house. So they're looking forward to going to a restaurant and having the restaurants cook for them. That's pretty common. I see that often, but he was wise enough to say, hey, I need extra income to do all those fun things.
Or even having a family trip, once every 3 years, I'm part of a family trip that has 30 some odd people there. And, like a lot of my clients say, if they can't take their money with them, right? So if they can't use it to bribe their children and grandchildren to spend more time with them, then what good's their money, right? So lots of various benefits of having more income than you think you need in the retirement.
Yeah, it's just really important. I mean, the way to win in retirement is have more income coming in than you're spending. So if you can derive a way to generate maximum income while you're retired, you don't have to worry about spending on your assets because you've got plenty of income coming in. So if you can make it to where you've got tons of income for the rest of your life, that's the way you win in the retirement game. But yeah, thanks again, Dave, and stick around for me. But coming up after the break, I'm going to talk more about how generating passive income with the right financial strategy can help you achieve your retirement goals. I'm Wes Wood, the Income Guy, and you're watching the Retirement Income Show.
A fiduciary is someone legally obligated to act in your best interest. Doctors, lawyers, and some financial advisors are fiduciaries, but not all. When you work with Wes Wood and his team at Wood Financial Group, you are working with fiduciaries. They help clients create customized investment portfolios based off their retirement goals. If you're ready to work with a fiduciary, visit retiretv.com and schedule a free, no-obligation conversation with Wes or a Wood Financial Group advisor.
Hey, welcome back. I'm Wes Wood, the Income Guy, and thanks for tuning in. Today, we're talking about making money in your sleep with passive income. And so far, we've talked about the risk and the rewards of several different passive income business strategies. But now, let's talk about the strategies used by income specialists. When you switch your investment focus from growth to income, you're creating a financial strategy designed to generate passive income, period. Making the switch within about 10 years of retirement makes sense for most people for at least two reasons. Number one, by then you've accumulated enough assets to generate substantial income. And number two, if you're like most people, your retirement goals are income-based. You haven't been saving all these years so you could go buy a yacht or leave a big inheritance. You've been saving so you can enjoy your income in retirement with peace of mind. And the key is to do that with passive income, primarily the kinds that generate from the tools and strategies used by advisors who specialize in income. Remember, total return is equal to two things: growth and income. Growth, the G, is measured by capital gains, and the income, the I, is generating through interest and dividends. In the investment world, strategies designed to generate passive income through dividends, things like dividend stocks and real estate investment trust or REITs, these options do carry somewhat more risk than those designed to generate passive income through interest payments. Strategies that generate income through interest are really at the heart of the income model. These are things like individual bonds and bond-like instruments designed to protect your principal while generating income at a fixed rate of interest. With these strategies, you can sleep well knowing that you can count on getting your income every month or every quarter, no matter what happens in the financial markets. But as with any strategy, and every strategy that we've talked about, it's not magic. It requires making the right investments initially and then managing them through to make sure that you're getting maximum income with minimum risk. And the good news, again, is that if you work with an advisor who specializes in income, they can help you do exactly that. But before I welcome back Dave, here's your last chance to get your copy of the informative report, The Fundamentals of Retirement Income. And this report comes with your free retirement income kit, available by visiting retiretv.com or by calling 615-826-5749. But now, let's welcome back income specialist and the founder of the Retirement Income Store, David Scranton. Hey, Dave.
Hey, Wes, you know, it's funny. I think you make a good point. At the top of the show, you talk about income-based investments being a passive income. But the reality is, for your clients, yes, it's passive for your clients, but it's active for you as the manager, right?
Yep. They're not just the set it and forget it like we talked about earlier. You know, when it comes to investing for income, a lot of times the folks that try to do it themselves and take that approach to it, like they were doing when they're investing for growth, aren't nearly as successful as investing for income. Because remember, if you're investing in the financial markets and income-based strategies, there still comes a level of risk. And you may have an investment today that looks great, but then maybe it doesn't look too good a few years from now, and it's a good idea to manage it and make sure that you get out of it at the right time. Or maybe there's an opportunity that we can take advantage of. But taking an active approach to investing for income makes it a little bit more difficult than just investing for growth. So we always recommend working with somebody that specializes in investing for income.
And you know, if you're talking about investment-grade bonds or bond-like instruments, you're right. Those aren't completely risk-free, and those need to be watched by you as the manager. So it's passive. They provide passive income for your clients, although it's not passive for you. But then when you get into things that have more moderate risk, then obviously those need to be watched by you. Again, passive income for your clients, but need to be watched even more closely by you as the manager, right?
That's correct, because you know, if you're investing in an individual bond or bond-like investment, you do have a contractual guarantee with the company that whoever's issuing that bond. And in a lot of cases, we can buy that bond and hold it to maturity, and we know that we're going to get the same dollar payment per interest as we're holding that bond to maturity every single year paid out to us. Hold it to maturity and we get our par value back. But if you leap into the things that have a little bit more risk, like the moderate types of investments, that's an ever-changing environment. And we can get a great sustainable income, but perhaps an investment that looks good today isn't going to look as good tomorrow again. And with more of the moderate risk things, you definitely got to take an active approach to investing into those because of the upgraded risk.
Yeah, and a lot of people don't even realize that when you're investing in the stock market, if you're investing in the stock market for dividends, it's great that healthy companies over time will increase their dividends, and healthy companies' shares of stock, the price at least will go up over time. But of course, it can go the other way too. And the reality is that investing in the stock market for income is more difficult than investing in the stock market for growth or capital appreciation, or as you say, for the G.
Right. Right. Yeah. Investing in the stock market for growth is, it's a momentum game. You know, when the water comes in, all the boats go up, like with growth, and when the water goes out, then the tide goes out and all the boats go down. That's kind of how growth works. It's more of you're trying to capture it on a uptick when the market's going up. And a lot of times, companies that maybe not that financially strong are actually increasing in value with growth. But investing for income, you really got to get to know the companies you're investing in. You need to know their financials in depth. You need to know their dividend history and how they've been paying dividends. Do they have enough cash on the sideline to continue paying these dividends while you're investing for income in the stock market? So it definitely takes more of a specialist or an expert when you're buying those types of investments in the market.
Yeah. And it's great to hear that dividends can go up over time, but also if you're retired, the last thing you want to see your dividends do is dry up, right?
That's right. Yeah, if you see a dividend get cut, then maybe you're doing it on your own and you're just setting it, forgetting it, and then all of a sudden a dividend gets cut. And then what does that do to your income in retirement? Of course, that means your income is going down. And we'd much rather see income going up in retirement, not going down, to hedge against things like inflation and other matters as well. But yeah, that's a good point. But when you're investing in those moderate and those higher risk investments, they're not right for everybody. But people that have a okay risk tolerance or a higher risk tolerance, using those types of investments can really give us a great inflation hedge. But hey, Dave, thank you for joining us again today. I'm Wes Wood, the Income Guy. I want to say thank you for watching. And if you have any questions about anything that we've covered on today's show, please reach out to me at retiretv.com or by calling 615-826-5749. We'll see you again next week.
A fiduciary is someone legally obligated to act in your best interest. Doctors, lawyers, and some financial advisors are fiduciaries, but not all. When you work with Wes Wood and his team at Wood Financial Group, you are working with fiduciaries. They help clients create customized investment portfolios based off their retirement goals. If you're ready to work with a fiduciary, visit retiretv.com and schedule a free, no-obligation conversation with Wes or a Wood Financial Group advisor.
Hi, I'm Wesley Wood, host of the Retirement Income Show, and I'm founder and president of Wood Financial Group. And we're a local independent financial services company that specializes in creating custom retirement solutions tailored to meet your particular needs.
Visit retiretv.com to learn how we can help you create a customized retirement portfolio.